Today, we will go over the most important Finviz screener settings and secrets. Every single day trader, swing trader, or investor should know these. It does not matter if you trade stocks or cryptocurrencies. You have to know these terms and the best ideal settings for them. We will deeply learn about these Finviz screener settings: options, average volume, relative volume, float, market caps, price, and the snapshot. Hello friends, hope you're doing great. What I see is so many traders do not know these important terms and settings. These are so critical to understand for trading right stocks, even cryptocurrencies. For example, deeply understanding relative volume or float will change everything for you. As usual, I'll try to explain them slowly and clearly. If you're ready, let's start. Okay, let's start with the country. I see so many traders forget to set this one. When you choose the USA, you are only screening companies listed on the US market and located in the United States. As you know, some companies have different geolocations but are listed in the US markets. Why do I select the USA? Because I have at least some understanding of official regulations and policies in the United States for the companies located in the US. So, simple is better. Secondly, optionable setting is very important for me. It's an extremely simple setting. By choosing it, I'm eliminating all the stocks that do not have any options. If you trade penny stocks or small cap shares, do not touch this setting, because most penny stocks do not have options. Don't worry, I'll show the best Finviz settings for penny stocks, small caps, options trading, and for investing. What are the advantages of this setting? First of all, for a company to have options, they have to meet certain rules and criteria. They have to have sufficient number of shares, enough shareholders, a certain amount of trading volume. Stocks with options generally have high liquidity and high trading volume, but this is not a rule. They are generally more established and more mature companies compared to non-optionable stocks. What are the best Finviz settings? If you day trade penny stocks or small caps, do not touch this setting. Leave it at any. If you day trade options, set it to optionable. If you are a long-term investor, set it to optionable again. Because most investors always look for more mature and established firms rather than penny stocks or small caps. Let's check out the average volume, probably the most important setting in today's list. Because trading volume is everything when it comes to trading. The average volume is actually quite simple. Same with the name. Average number of shares traded in a security per day. For example, if a stock's trading volume is around 1 million shares per day for 30 days, that stock has an average daily trading volume of 1 million shares for 30-day period. Finviz calculates this number for the last 3 months. My number one rule is never touch anything lower than average trading volume of 100,000 shares per day. Simply put it, stay away from anything with a low trading volume. What are the advantages of high volume? First of all, it's easy to sell and buy the security. Liquidity is high. And order execution times are better with high volumes because many people are willing to buy or sell the shares, although execution times also depend on your broker. Due to the high number of participants, bid-ask spreads are generally low. Penny stocks and small caps with high volume are entirely another story. Price will be like a roller coaster, but it's great for day traders. We need high volume and high volatility for day trading. Finally, a steady rise in average trading volume can confirm many price actions and chart patterns, so it supports our trading strategies. My ideal settings are: for day trading penny or small cap shares, anything more than 100,000 shares or 500,000 shares, even better. For day trading options, anything more than 500,000 or 1 million shares. For investors, over 1 million shares. Okay, finally the relative volume. Number one ratio for day traders, extremely important. We day traders are after bull-bear flags, pullback breakouts. We also look for pre-market and previous day's highs or lows for breakouts. And you need high relative volume for these things to happen. Relative volume is the ratio between today's current volume and the average volume. For example, if the average trading volume of a company is 1 million shares, but today the current trading volume is 3 million shares, then your relative volume ratio will be 3. Very simple calculation. Sometimes you can see penny stocks or small cap stocks traded with a volume of 100 million shares in a single day with an extremely high relative volume ratio. Yes, it happens. More volume, more participants, more people, more volatility, more activity, higher relative volume, better spreads, tons of bull-bear flags and pullback breakouts. This is how I see things before I day trade. All this is a chain reaction of events. One important thing about penny stocks: never hold penny stocks overnight. They are for getting in and out the same day. Please remember this, otherwise you can be a backholder for years. Why do we want high relative volume as day traders? Firstly, the activity. High relative volume means something is happening that day. It could be any kind of catalyst: news, earning reports, product release, new deals or contracts, anything. With a high relative volume, spreads generally get smaller because the trading activity will be crazy with millions of people interested in the stock. Easy to sell and buy these stocks with better execution times most of the time. If you have a reliable broker, your orders will be filled even faster. There will be a high volatility as well, and this is what we want as day traders. Since I'm mostly trading bull-bear flags and pullback breakouts, I need high volatility for these patterns. You will not see this pattern so much during consolidations with low volume, and you will see many fake breakouts with low volume. Let's check the ideal settings. If you day trade penny stocks or small caps, you will want ideally over 1.5 or 2. Higher the number is better actually. If you day trade options, you will want to trade more mature companies with tight spreads. I mostly set it over 1.5 or at least 1. Because mature companies already trade in high volumes, it's really hard for them to have a really high relative volume. If you are an investor, just keep it at over 1. Okay, float. Many beginner traders ignore the importance of shares float. So, what is it? It's simply the number of common shares which is tradable by the public. Who is the public? It's me, it's you, funds, and so on. The formula is simple, as you can see. You just deduct special shares from the shares outstanding, which represents all the available shares that exist in the world. The general assumption is, if the shares float is less than 20 million, we assume that the float is low. Now, depending on your trading or investing style, you have to determine if you need a low or high float, because both of them serve different purposes. Low floats are better for you if you are day trading penny stocks or small caps. Why? Because the volatility is high for these stocks. Price movements are crazy in these stocks. These stocks could be easily manipulated with large orders, and you ride these price waves as a day trader. When you trade penny stocks or small caps, you must have volatility to gain 20, 30, 50% or even 100% in a single day. You have to get in and out, hit and run, try to find a possible home runner and ride the wave as much as you can, a heaven for bull or bear flags. High float stocks are better for you if you are day trading options or looking for something to invest in. These stocks are generally less volatile, they have better spreads, price moves are healthier and steady. Manipulation of these stocks with high shares float is hard, really hard. It's not impossible, but you need extremely large orders or panic selling in the markets. What are the ideal settings? If you trade small caps or penny stocks, you can check out anything less than 50 million. But be careful, lower the number, easier for extreme manipulation. If you day trade options, well, ideally look for stocks with over 20-30 million at least. If you want to search for stocks for investing, set it over 50 million. Do not bother looking at anything less than that. Next is market cap. What is a market cap? It's a measure of corporate size, calculated by multiplying market price and the number of shares outstanding. For example, Apple, Microsoft, Google, and Tesla have the highest market caps in the world. Trillions of dollars. Crazy numbers. These companies value even greater than most countries' GDPs. Small caps and less than small caps. These stocks are volatile due to their low price points and low floats. There will be crazy price moves in these stocks in a single day. They have generally low volume and higher spreads, unless they have a high relative volume ratio. Relative volume is key for trading small caps and less than small cap stocks. This is where penny and small caps traders step in. This is where people grow their small accounts by taking high risks. Mid, large, and mega caps. These stocks are more mature and established companies like Apple. Volatility is less, spreads are better. But shares will be much more expensive than small caps. It's hard to grow small accounts unless you trade options. For example, Apple, Tesla, and AMD are some of my favorite stocks to day trade options. I check these stocks every single trading day. If you trade penny stocks or small caps, just set it to minus small cap. If you day trading options, I most of the time set this to plus small caps over 300 million. If you are an investor, plus small caps or plus mid caps will be a great choice. Price. Well, setting the price is so simple. If you want to day trade penny stocks or small caps, just set it under $5 or $10. If you are looking for day trading options or something to invest in, look for stocks with the price over $5 or $10. You can just adjust these settings because there are no universal rules for these Finviz settings. Once you complete your settings, just click the snapshot, and everything you need is there. You will be able to see the charts, and Finviz draws the most essential patterns for you, from trend channels to double bottoms. Furthermore, the news. Finviz finds the best news from all over the web, from blogs to newspapers, and line them up for you. Okay folks, if you're a stock trader or crypto trader, you have to know these terms: market cap, relative volume, float, and so on. Very critical terms to learn, and Finviz is the best place to learn these. I hope you gained a great piece of knowledge today and improved yourself. Would you like to subscribe to the channel and leave a like so I can bring you much more free and quality content? Please take care and see you soon.